Warren Buffett. You've heard the name, right? The Oracle of Omaha, one of the wealthiest people on the entire planet. But have you ever wondered what the one single strategy is that took him from a regular kid to an absolute legend? Well, today, we're going to break it down. Let's get right into it. Now, a lot of people think Buffett's success is some kind of magic, that he's just randomly picking hot stocks or perfectly timing the market. But the truth? It's actually a shockingly straightforward rule, a rule that has consistently beaten the market for decades. But hang on, before we even get to the strategy, you've got to understand his mindset. This is key. Buffett doesn't play the stock market like a casino. He's not a trader, he's a business owner. He thinks about value, quality, and most importantly, patience. And this one quote, it says it all. This is the whole philosophy in a nutshell. He's not out there dumpster diving for cheap, mediocre companies. No, he's looking for truly excellent businesses that he can buy for a reasonable, fair price. So what is this legendary strategy called? It's called value investing. And right now, we're going to unpack exactly how it works, step by step. It's simpler than you might think. Okay, so value investing really stands on 4 simple pillars. First off, only invest in a business you actually truly understand. Second, you have to find what he calls an economic moat, basically a strong competitive advantage that keeps rivals at bay. Third, figure out what a company is really worth, its intrinsic value, and only buy when it's on sale. And finally, and this is the hard part, you hold on for the long haul. You just ignore all the daily market noise. Let's zoom in on that idea of an economic moat, because it's super important. What is it? Well, think of it like a castle. A moat is that ditch of water that protects the castle from invaders. For a company, it's something that protects its profits. Think about Coca-Cola's brand. That's a huge moat. Or Apple's ecosystem, where all their devices just work together seamlessly. That's a moat. It's what makes a company truly durable. So here it is, the secret sauce. If you had to boil down decades of his wisdom into one single sentence, this is it. Buy great companies at fair prices and hold them forever. It sounds so simple, right? But having the discipline to actually do it, to stick with it, well, that's what makes all the difference. All right, so that all sounds good in theory, but how does this actually play out in the real world? Let's take a look at the proof right inside Buffett's own portfolio and see this strategy in action. Okay, let's talk about Coca-Cola, a classic example. Buffett bought a huge stake back in the 1980s, and guess what? He still owns it today. He's collected decades of consistent growth. He didn't panic and sell when the market got shaky. His bet wasn't on a stock chart. It was a bet on a quality, durable business with a massive global brand. And how about Apple? For years, Buffett famously avoided tech stocks. He said he didn't understand them. But now, Apple is one of his biggest investments. So what changed? Well, he realized it fits his rules perfectly. It has that incredible brand power, a huge moat. It has a fiercely loyal customer base that will buy anything they make, and that leads to predictable, long-term profits. It was a wonderful company he was able to buy at a fair price. See how it works? So what does this all mean for you? How can you take these ideas and actually use them? Let's boil this all down into an actionable blueprint that you can use when you think about your own investments. Here is your blueprint. Rule number 1, stick to companies you get. If you can't explain it to a 5-year-old, stay away. Rule 2, look for that moat, that durable competitive advantage. Rule 3, never, ever overpay. Do your homework and figure out what a business is actually worth. And Rule 4, the golden rule, be patient. Let the magic of compounding do its work over years and decades. This mindset alone can totally transform how you build wealth. We really hope breaking this down helps you on your own financial journey. Here at Data Finance, that's our whole mission, to give you clear, valuable insights that you can actually use. And hey, if you found this explainer helpful, could you do us a huge favor? Hit that like button, maybe share it with a friend who'd find it useful, and of course, subscribe to Data Finance for more deep dives into the minds of the world's greatest investors. So, to leave you with one final question, which one of Buffett's strategies are you thinking about using first? Let us know down in the comments below. We'd love to hear from you. Thanks for watching, and we'll see you in the next one.